However, I finished from the Federal University of Ilorin, not not OAU. See, people should not
Okay.
call me. So University of Ilorin is my alma mater. That's where I
Also
studied
about that.
business. Yeah, that's right. That's right.
Yeah.
All right. Without wasting much time, this is it. So, okay. I'm just going to go ahead and share my screen. Oh, let me show my face a bit. As
Okay.
Nigerians, as our economy still has a long way to go in terms of power supply. So, uh, but this is me. Hello, good evening. I don't know if you can see me yet. But yeah, okay. Hello, good evening, everyone. My name is
Good
Christopher.
evening.
Awolowo. All right, so that's my face. I'm going to go ahead share my screen so we can move forward. All right, please let me know if you can see my screen. Started sharing. Can you see
Yeah,
my
we can
screen?
see your screen.
All right, awesome, awesome. Okay, so down to it, Nigerian Tax Act 2025. It was propounded 2025 but took effect on the 1st of January 2026. So, as Bushro earlier mentioned, we're going to be examining tax compliance, the essentials for freelancers and remote workers in 2026, right? And beyond, of course. If I'm speaking too fast, and call my attention and just make me, so I can go over some of the things I've said. However, I believe after the session, there will be room for questions. So if you have any questions, please let's jot them down. I'd rather just have me walk through everything and take questions after that. Have to stop in between to answer questions. With that being said, I've been introduced already. I'm just going to, just brush through things again. My name is Christopher. I'm a researcher. I finished from University of Ilorin in 2023. I currently work with a think tank here in the city of Abuja, where I've been privileged to work on projects spanning across different areas, but also with international partners like UNDP, ICTD, Mastercard, and a couple, just to mention a few. Right. Um, I are particularly interested in human capital development, finance, and culture, which is one of the reasons why tax fall within the purview of finance, which is one of the reasons why tax is also an interesting subject to me as well. Taxation can be subject matter that is complex, right, and boring, just like Bushra said. So, however, it is something. I mean, one of the tenets of taxation is simplicity. However, as a country, Nigeria still has a long way to go in terms of its governance, its policies, and a number of things. And I would like to, assume that one of the things this new tax reform is meant to do or has come to do is to simplify the tax system in such a way that it eliminates a lot of ambiguity and confusion as regards to what tax is, who will pay tax, and everything about that. Now, first off, I would not like to assume that we know what tax is. So I'm just briefly going to just give us an overview into what tax is and what tax is not. Right. So first off, I know as a country, as a people, right, we can be skeptical about paying tax, right? A lot of Nigerians don't pay tax. That's the truth. A lot of Nigerians are outside the tax net, right? They are not in the tax bracket, right? And for some people, it is done intentionally because they don't see it as a need. They don't see it as a necessity, right, to do. However, tax is a legally required contribution paid to governments based on income, profit, or economic activity, right? So the implication of this is, in layman terms, I would say tax is the cost you pay or the price you pay for existing in a society, right? The society has to run, right? The society has to work. So if you're living within a particular space, consider tax the cost, the price, right? Your existence fee to be in that society, right? However, tax is not a fine, tax is not a levy, and tax is not a punishment for any offense or criminal activity. Neither is it a discretionary donation that you just say, okay, the way you charity, it is not charity, it's not charity donation, it's not something you say, okay, this year I need a lot of money, so I'll give more tax. Next year or this year, I have a lot to do with my money, so I'm not going to pay tax. I don't know if you understand what I'm trying to say, but tax is not a punishment. You cannot commit a crime now or break the law. Then the lawmaker, the court will now say, okay, pay this tax. Tax is not a fine, it is not a levy, it is not a punishment, right? Tax is not a punishment. You can't impose tax as a punishment. That goes for the government, right? They can't impose tax as a punishment. But tax can be used, right, by the government to do quite a number of other things, right? But what tax is, in layman terms, is the cost you pay for existing in the society, right? For that society to work. And the proceeds of tax are now what the government uses, to produce public goods like power supply, like good roads, security, defense, among just to name a few, even for the day-to-day running of the government itself, right? So let's examine the different types of tax we have in the country, which has not changed, right? We have three major types. Tax is classified broadly, right, into three types. We have the PIT, personal income tax, we have the CIT, company income tax, and the CGT, capital gains tax, right? For the purpose of our conversation tonight, we're going to be focusing more on the PIT, right? Just a brief brush across the other two, right? PIT, just as the name sounds, right? Personal income tax or payee for those who work in paid employment, right? Where you work with a firm, a corporate institution. Personal income tax applies to income earned by individuals, right, from employment, whether you're freelancing or you're consulting, you're working at a firm or not, right? So if you hear payee and you hear PIT, they are not different, they are the same. But even I would say before coming into this space and understanding what that is, I used to think they are different things, right? But pay is just pay as you earn, right? It's different from PIT. And it's not different, it's just another name for tax paid by people who are employed, right? Through government, parastatals, let's just say white collar jobs, basically, for salaried workers, people who earn salary. So it is a structure for people who earn salary to pay their tax, so that at the end of the year, they don't say, oh, I've spent all the money I earned this year, so I don't have tax to pay. I don't know if that makes sense. I'll explain why this is like that in a bit, but let's move on to company income tax. So company income tax, CIT, just like the name implies as well, applies to registered companies. So when I was explaining what tax is earlier, I said tax is the costs a person's pay or the cost of existing in a society. And before the law, right, most companies are recognized as a separate entity. They are recognized as I don't want to use the word a person, but an entity that exists within an economy. So the company is also believed to engage in economic activities and is also expected to pay tax, but due to a number of economic activities that would yield profit, income, and amongst other things, right? And capital gain tax applies to profits made from selling or disposing of assets, not from regular income. There's income where you are earning money due to an economic activity. Capital gain tax is levied on the exchange of assets, right? Income gotten from selling or exchange of assets, right? So it could be landed property, it could be digital assets, shares, you bought a share from the company, among other things, right? But capital gain tax is triggered only when you are disposing of the asset. So if you own a land now, nobody is going to come and tax you because, of course, except you begin to use the land as a form of income, whether you're farming on it or whatnot, but the tax will not be on the land, but on the economic activity. I don't know if that makes sense. All right, so back to PIT, which is the focal area of what we're discussing tonight. PIT, like I said, applies to individuals, a person, right? A single entity, a single person who has worked, who has generated income one way or the other from an economic activity, right? However, Nigeria operates a tax system that is progressive in nature, right? Progressive in the sense that the more you earn, the more tax you're expected to pay. And that is very obvious from the tax structure, which we will get to also. And I mean, I know most of us already have an idea of, say, between this range, 0 to 800,000, not pay tax, 800,000 to 3 million, you pay 50%, and so on and so forth. So, but Nigeria operates a tax system as well, where that is self-assessed, right? So, meaning that your payment of tax is through self-assessment. And what does self-assessment means? It means you yourself would look at, oh, how much did I earn within this financial year? Oh, I earned 10 million. And after allowing for allowable deductibles, right? There's what is called deductible allowance from your income, right? Things like your rent, your expense and all those things. You'll be left with what you would call your taxable income, right? All your income is not taxable. That's the truth, right? So there is what is called deductible allowances, right? Where you can deduct, say, oh, my rent currently the tax law allows up to 500,000, right? Deductible, right, from your income. So if you earn 10 million, for instance, you can deduct 500,000 for rent, where you have 9.5. So if there are no other allowable deductibles from your income, it means 9.5 million is your taxable income. I don't know if that makes sense. And this is where payee comes into the picture. Payee is for those who are salaried, right? Who receive salary. Since your payment of tax is expected to be annual, right? Like you pay it as once based on what you've earned in the financial year. What payee does for you is your employer deducts the money, right, from your salary monthly, and at the end of the year, you pay it at once on your behalf. In most cases, you can request for the money and pay it yourself, right? But like I said, just have the idea, or just let's register in your mind that PIT is self-assessed, right? Nobody is necessarily going to pay the money on your behalf if you don't. In fact, even if somebody has said they will pay it on your behalf, for instance, your employer, you have to follow up to ensure that they actually pay it, right? If not, if the tax man comes calling, you might have yourself to be a non-considerate. All right, moving on. Who does the Tax Act now apply to? Right? This Tax Act, this tax law, this reform, that's who does it apply to? Right? You live and you work and you earn in Nigeria, whether the business or client you're working with is in Nigeria or abroad. As far as you're within the legal age, you will live, you work, and you earn in Nigeria, you will pay tax, right? You own a business, you operate a business that runs in Nigeria. Whether you are in Nigeria or not, that business will pay tax. And if peradventure that business is also paying you money, you most likely would pay tax, right? You earn income from Nigeria, right? Even if you're physically outside the country, right? So an engagement, this is almost similar with what was said above, right? The second point. Okay, then I think I should take a break and be sure you can hear me because I can't see the screen. Please, can you hear me? Hello.
Yes, we can hear you.
All right. Thank you so much. Um, so you earn income from Nigeria, even if you are physically outside the country, you pay tax, right? The next point is who will pay tax? Who does this tax law apply to? You are in Nigeria, tax residents working remotely for foreign clients, right, or companies. So basically, this is also reiterating what was said in the first point. You're in Nigeria, right? You are working remotely for foreign clients or companies, you will pay tax, right? You are a non-resident individual or company with a taxable presence in Nigeria, such as this is also reiterating the second one. Having a taxable presence means you're operating a business in Nigeria, right? Or you're earning from Nigeria. So an individual is generally considered tax residents in Nigeria if they are present in the country for a period of 183 days or more within a 12 months, within a year. Right? So if they come to Nigeria and they live in Nigeria for more than 183 days within the space of a year, they are considered to be tax residents, so they can be taxed, right? So, and once tax residency is established, your income, wherever it is you are earning it from, can be taxed, right? Can be taxed. So, I want this to be clear, right? You know, when I was saying you earn income from Nigeria, even if you live outside, I said you might, right? Because tax residency has to be established. That's if you're earning from Nigeria, you're outside Nigeria, right? So, but once tax residency is established, that oh, you meet this criteria, you can be taxed, right? Subject to, right, reliefs and treaties where applicable, depending on the country, depending on the employer, depending on their law.
Hi everyone. It seems the speaker is having a network issue. Please let's patiently wait for him while he fixes it.
All right, so I think I had issues with my network. I don't know about. Hello, can you hear me?
Yeah, we can hear you now.
All right, thank you so much. Okay, I don't know what you heard me say last. I know I was talking about tax residency.
Mhm.
Hello, can you hear me?
Yes, we can.
Yes, we can hear you.
All right, thank you. Okay, so I was talking about tax residency. So once tax residency is established, you are eligible, or the tax law, the Nigeria tax law applies to you. Now, how it applies might now differ, especially if you're working with an international organization. They are to avoid for double taxation. there are some reliefs that might be applicable to you, right? So in most cases, it is best that you employ the services of a tax consultant, right? So you know the reliefs that are applicable to you based on your, your unique working condition. So moving on. So now, as a global talent, right? How does the tax law affect your income? Right? So the new tax law has changed how income is identified, classified, and reported, right? Especially for freelancers and most workers. One thing that the new tax law has done, right, is not to impose new taxes. Is the exact word of new taxes, right? But to capture those who have been left outside of the tax bracket before. Right? I mean, one of the, should I say, at what was it called when politicians come and say manifesto, right? One of the manifesto of this administration was to increase the tax rate, right? So, and that is probably what we're saying happen. Yeah, what they've tried to do is expand and or capture those who have been left outside of the tax net before. So, right. This does not mean you're paying new taxes. It just means that the government now has more oversight to monitor people, right? Monitor the income of people, and we've now captured a lot of things that were, in the gray area before, especially as it has to do with digital assets, cryptocurrency, among other things, right? So, how does this affect your income specifically? So, foreign earnings now, like, are more clearly within the scope if you are tax residents in Nigeria, right? Digital and remote work is explicitly recognized. So whether you're working, before you are working remotely, you almost are not taxed, right? Or you don't fall within the tax bracket. But now the tax law specifically captures, like it is clearly stated there, that digital work, remote worker, now reducing ambiguity, right, around online work. Self-reporting obligation increases for freelancer and independent professionals. Remember when I was explaining the types of tax, I mentioned that Nigeria operates a system that is called self-assessment, right? So you are expected to self-assess your income, do the deductibles, and then, from your taxable income, calculate how much tax you owe, and then pay it yourself, right? I'm making emphasis on this because there are some myths, and fables around tax payment and also, but we'll get there in a bit. So better tracking of income flows through banks, fintechs, and payment platforms. This is possible by through collaboration between the government as the taxman and all these agencies, right, and third-party agencies. Now they can track your income flows, right? But not to worry, like I said, I know there are some myths around this, and we'll get there in a bit. Now, higher risk of penalties for under declaration or non-filing, even where tax payable is low, right? So now there is clearly stated penalties if you under declare your taxable income or you don't even file at all, right? So under declaring is that you make 10 million, you go and say, oh, your taxable income is 5 million, right? So you're under declaring your income so you can, reduce your tax. Non-filing, you don't even file at all, you don't even pay, right? So reliefs and allowances still apply, but only when your income is properly declared. And the compliance here is the focus, right? They want more people to comply. As I said, I mean, for a lot of persons, if you are not working in a structured environment, that is, you're not working with a fair, a properly registered fair, or working with the government, most people don't pay tax. And that is the truth. Most people don't pay tax. So now the new tax law is trying to ensure compliance, right, and reduce tax avoidance and evasion, right, in the economy. So these are just some pointers saying when you earn in other currencies, the tax rates, right, is only deductible to the naira equivalent of the official exchange rates declared by the CBN. So meaning that if you earn $2,000, for instance, right, the government will not say $2,000 and say, oh, what is the way they will tax you is to say, what is the naira equivalent of this $2,000 converted using the official exchange rate? There are different exchange rates, right? The parallel market, which is what you call black market, that's market that's exchange rates that different platforms use based on demand and supply, right? But there is the official exchange rates, which the government, the MIFEM, right, MFEM, which the CBN sets, right? So that is the rate that will be used to convert, and that is how the tax you will pay will be calculated. That's the amount that the tax you will pay will be calculated. So the tax law, like I mentioned, does not exactly introduce new taxes enforcing the existing ones. It has consolidated multiple taxes, right? So that, you know, government has done, or what's here, is to consolidate a lot of these multiple so that people don't run, right? People don't run. Because by the time as a founder, as the owner of a business, as an entrepreneur, I will pay this tax, I will pay that tax, I will pay this tax, I'll pay what is left for me that has, you know, labor and try to build up the business when you are collecting on my profit. Like I would avoid by default, I would want to avoid paying tax. Right? So what the government has tried to do, right, is consolidate these multiple taxes and to also ensure better compliance. Right. So down to what can the taxman do? Like I said, there are bits of myths and fables around the tax system. You know, the government will go to your account and remove money, right? The government will, you know, once they are monitoring your money and all of that, we will talk about that briefly, and I will explain what the taxman can do and what the taxman cannot do. So, what can the taxman do? First is to issue an estimated tax bill, right? So, what this means is that after the end of the financial year, which normally ends around, I think, March every year, right? You're expected to have filed your tax returns around March every year. I forgot the exact date, but I know it's around early the first quarter of the year. After the end, the taxman looks at your income that you have declared, right? And looks at your taxable income that you have declared. They can say, you have lied, right? Based on the data we have, you have lied, and this is not supposed to be your tax. Your tax is supposed to be more than this, and they will issue you what is called an estimated tax bill. For those of us who have who have lived in places where you don't have a prepaid meter, right? There's what's called an estimated bill with NEPA bill, right? With light bill. The estimation is just saying, oh, you people in this area, you use so B, right? So every household, because this house is very big, your bill is going to be 50,000, right? Because this house, it is not exact, right? But based on observation, the taxman can issue you an estimated tax bill. And once you are issued an estimated tax bill, you are expected to pay, right? However, you can contest it, meaning that if you are issued an estimated tax bill and you feel the estimated tax bill is unjust, you can take it back to them and say, this is wrong, I am not supposed to pay this much. Then you come with your receipts, right? You get your rebate. What can the taxman do? Second is calculate your tax using third-party data, right? So, like I said, the estimated tax bill connects with this point, right? Because before they can issue you an estimated tax, first off, remember that you are the one who want to declare your income, right? You are the one who, like, it is self-assessed. You just want to go and say, oh, this is how much I earned, this is my deductibles, and this is my taxable income, right? Then based on that, you will say, okay, this is how much I am paying and you pay it. However, the tax man, right, by law now has the ability to request for third-party data. Right? Meaning, I mean, your TIN, which is your tax identification number, that's what we've been using before now. But if you want to use the tax identity form. Yes. Your TIN, your NIN, your BVN are all connected. So they can now request for access to those third-party data and say, okay, by law, we want you to submit. It can be your employer self, it can be your bank, it can be based on, depending on, where they feel they can get your data best from. They can, request for that data and then with that calculate your tax and say, okay, that's a lie, that's a lie, that's a lie. This is how much you will pay, right? And this is how much you're expected to pay. Now, what else can they do, right? They can access your account information with proper legal authorization, meaning that they cannot just come and say, hey, give me the account details for Tamedo, or give me the account details for BC. I want to see, right? They must collect legal authorization, such as an injunction from the head of the IRS, right? So, and authorities can request your account statement to review types and amount of transaction in your account. Like this helps them verify your income, right, and detect undeclared funds. Now, the last thing the taxman can do is seize your assets for unpaid taxes. Now, I know this sounds a bit corny, you know, counterintuitive to what I've been saying about the myths and taboos, right? But yes, the taxman can seize your assets including cash or even landed properties, right, to cover for unpaid taxes. However, this is not something that happens on impulse. Like the government just say, oh, you not paid tax for last year, bam, freeze his account. That's not something that happens like that. In fact, according to data from the internet, this has only happened twice in the history of Nigeria, right? Twice. And of course, on both occasions, it was not individuals, it was with institutions, right? One was even a government institution. I think the other is a private institution. That has only happened twice. And it took years to even formalize, to get the approval to do that, right? So, but yes, the taxman can seize assets. What does this mean? It means, like I said, this will be a process, meaning that you've declared your income. The taxman says, oh, this your income is a lie. This is what we expect you to pay. Then they give you an estimated tax bill, right? However, for 2-3 years, you don't pay the tax, or they even find out that you've not been paying taxes. Then they will give you your tax bill, or they impose a penalty, right, on you, whether it is to lock up your company or whatever, right? But if by adventure you still now default from paying, that is when they now begin to take legal action. They take you to court and demand, that it's called repatriation, right? Repatriate how much you are currently owing the government in tax, right? So what they do is they don't just seize all your money, of course. They don't just seize all your property. They do valuation, for how much you have, or it's a property, how much it is worth, how much it can be sold for, and will it be enough to cover, your obligation, your tax obligation. And in any event, it happens like that, right? Just to cover, unpaid taxes. Just from what I've explained, I don't think this is something that the taxman will do to the everyday citizen, but most likely for the institution, right? Because one of the tenets of tax, right, is also that the amount that you are spending to collect a tax should not be more than the amount you are collecting as tax itself. I don't know if that makes sense. Meaning that if I want to come and collect tax from a person and I stay in, say, Abuja, for instance, and the person stays in Lagos, right? And the tax I want to collect from the person is 50,000. And I have to fly from Lagos to Abuja, from Abuja to Lagos, Lagos to Abuja back. Already my flight ticket is almost 300K to and fro, right? So, and I want to go and collect 50,000. It is illogical for me to use 300,000 to go and collect 50,000, right? So, meaning in most cases, it does not get to this point with individuals, right? So, I'm not saying you should evade tax. Don't get me wrong. Penalties can still be imposed. But what I'm saying is, the fear that people have about, the IRS seizing their money from their account is almost unfounded, right? Because I don't think it will ever get to this point with an individual, of course. So, okay, for some terms, I've been using some terms, taxable income, allowed deductions, and whatnot. So the explanation is just below the chart, the slide. Taxable income is the portion of your income that is subject to tax after accounting for exemption, allowances, and deductions. Right. So, what are now the allowed deductions? These are expenses or allowances that the law permits that can reduce your taxable income. One of them is your rent, right? Like I said, for firms, is business expense, right? You can write off some things as business expense, right? So you can, there are a number of them, like that. They are called allowable deductions, right? They can be depending on the category, your working conditions, whether you are married, whether you are single, all those things, right? Fall within whether you own your own house, whether you are paying rent or not. All those things is what determine what your allowable deductions are. So after you've now deducted those allowables from your income, what is left is what is called your taxable income. So moving on, what can't the tax man do? The first thing is the tax man cannot directly debit your account. So you are not allowed to just, this person has not paid tax, right? In fact, from what I've explained, you pay tax at the end of the financial year. So tax is not something you calculate your tax annually. It's not something you pay, in bits necessarily. Even for pay, why it is called pay as you earn is because your employer collects it on your bill address, collects it. They can be depositing it directly, but in most cases, they don't deposit it directly. They just keep it until the end of the year and then they pay it. So meaning the tax man cannot, say, oh, at the end of January, you earn 10 million naira came into your account, right? So you must pay, 1 million naira tax because you've not paid it by February 15th. Yeah, they remove money from your account. No, that's not how the tax law works, right? That's not how it has worked, and that is not how it will work. That's not the new tax law does not allow for anything like that, right? Um, the taxman cannot penalize you for minor clerical errors without notice, meaning that even if you under declare, the taxman cannot just penalize you, right? They would first give you notice that, oh, we've noticed discrepancies, right? We've noticed they cannot just, I don't know, it's not something they can just do mindlessly and say, oh, because we saw this, we did that, right? They would give you the opportunity, even when they give you an estimated billing, you have the opportunity to go back and contest it, right? Which is why I wrote here, right? The narration in your bank transfer does not affect your tax, right? But it can help resolve any discrepancy in the event that you receive an estimated tax bill. So that's thing about when you want to buy car, send 50 million as gifts. Don't worry, you put yourself in trouble when when you need to contest. I don't know if that makes sense. So that narration thing is not so the tax man can come and remove money from your account. It is helpful. In fact, it is more helpful for you to have narration in the event that you receive an estimated tax bill. It helps you contest and say, see, this is what I use this one for. I use it to buy airtime. It is a business expense. See this one, I use it to pay for airport shuttle. It is a business expense. It is a, this one is not tax. Oh, you see this one, this is the amount I paid as rent. But if you send money to your landlord or you send money to a supplier, you now put gifts, then your supplier runs away with your money. You can't take the person to court because you said it's gift. So why are you stressing the man? right? So the tax, I know it might sound funny, but it's the truth. So the narration in your bank transfer helps you more than it helps the taxman. That's the truth, right? Because the taxman, first off, will not just request for your bank account statement, right? So, in fact, in most cases, they don't need to, it does not get to that point. It's a process where they notice discrepancies and then say, oh, there's discrepancy here. We believe that you should be paying more based on what you declared, right? Or we notice that you called something a deductible, but because under the category you fall, it is not a deductible. So your taxable income should be higher because of that deductible that you removed. I don't know if it makes sense. So they cannot just penalize you for minor clerical errors without notice. So tax income that is legally exempt. So certain types of income are protected under the law. So, like government approved allowances, your pension, right? And there are other ones like that are explicitly exempted by law, right? So, which is the gifting thing that people are saying you should do. So, if I send you money, if I send you money, sorry, excuse me, if I send you money as gifts, as donation, right? Charity case, right? Those sort of income are legally exempt from tax, right? So, it's why people are saying put gift in the what's it called in your bank narration. But if it is a gift, fine. But if it is not a gift, it is in your own best interest, right? That you write what the bank transfer is for. So I wrote here that as a freelancer, you are subject to taxation through self-assessment. I've been saying this. This means that you are responsible for calculating and reporting your own income to the tax authority. You must keep accurate record of all your earning and allowable expenses. Submit returns on time and pay any tax. Your failure to do so can result in penalties or interest. But self-assessment ensure that as a freelancer, you take responsibility for your tax, right? And also giving you the opportunity to claim deductions, exemptions where it is legally available. So when you're giving, okay, I mentioned that when you're giving an estimated tax billing, you can contest it with evidences like your bank statement and receipts, right? Or other proofs of transaction. So you bought a car for business, you have the receipt from the car dealer. You can take it and say, yes, I bought the car truly, but it was for business, right? So you can see the car is not bought, was not bought under my name, it was bought under the business name, right? So if you want to, just check it out on how to calculate your tax liability, you can visit this website, www.fiscalreforms.ng. There's a tax calculator there, right? If you need me to show maybe after the session, I can just take you through and walk you through what the tax calculator looks like. So yeah, how about my virtual asset, right? So this is another key area that is a bit easy for people, right? How about my virtual assets, with the currency and all. So the new tax law has done something that has, like I said, it has brought in some sectors that were outside the tax net before into the tax net now. So what are the included and excluded virtual assets, right, under the new tax law? The included ones are cryptocurrencies, token, digital collectibles, and payments, right? Digital payments, right? The excluded ones are, national foreign currencies, CBN licensing money, loyalty or reward instrument, and certain ISA covered digital representations, right? So those ones are not being excluded, although some of them is not total exclusion, but they are giving conditions, giving what's it called? Yeah, let me use the word conditions under which they can be excluded. But generally, let's just say they are excluded, right? And so for your virtual assets, what can trigger tax exposure, right? So I don't forget. Let me write this down. Right. Doctrinal on digital assets. Okay. So you sell or you cash out, right? The digital assets, for instance, the sale or exchange or transfer of a virtual assets. Typical example is you sell BTC USD, like for Naira, you transfer from one person to another person for value, right? You sell your Bitcoin, you trade on Forex, you make profit and all, you are taxable, right? that income will be taxed. You swap or you exchange virtual assets, it will be taxed, right? The income you get from that swap, right? The excess income you get is taxable, right? You pay with crypto. So the fact that you are now paying with digital assets, it does not exempt that payment from tax. So as a what's it called? As a freelancer, the fact that you're now telling your employer not to pay you in dollars but pay you with Bitcoin and cryptocurrencies does not exempt you from tax. I don't know if that makes sense. So as far as it is payment for goods and services, whether it was done using money or done using digital assets like crypto, it is taxable, right? You mine or you stake, right? So income generating mining or staking activities is taxable, right? So airdrops, all these airdrops, crypto airdrops and all received as compensation or reward, right? Referral rewards, bounty payment of activity, blah blah blah. It starts. So generally, let's just say what the government has done is just try to say, okay, as far as it is an economic activity that is making you money, right? What the new tax law has tried to do is bring it under the tax umbrella and say, okay, we are going to tax you, right? I know issue. Okay, yeah, legal and ethical consideration before I just talk generally. So corporate tax planning and individual tax planning must be adhered to, right? You're in Nigeria, tax evasion is a criminal offense, right? It is illegal, right? So it is not something that we're just saying for fun. It is a topical issue. It is being debated everywhere, not because it is fun to debate, but because if you are caught once, saying if you are caught lacking, you can do jail time, right, for evading tax, right? You can be, reprimanded for it. You can, different penalties depending on the severity and the time lag of evasion, right? So while reducing tax liability is a goal, aggressive tax avoidance can damage reputation and invite regulatory scrutiny, right? For corporates, your company can be asked to pay some amount of money that will make it fold up, among other things. Right. Okay, this is the tax rate. I just wanted to show that that's for personal income tax before we move on. This is okay, so I've used up time. From 0 to 800%, I think I should explain this a bit. I think that this is all here. From 0 to 800% annually, right? You are expected to pay 0%. Right? From 800,000 to 3 million, 15%. From 3 million to 12 million, 80% like that. But the highest is 25%. So what this means is practically, if you earn 3 million, right? 3 million naira. So the first 800,000 and 3 million naira will not be taxed. 3 million annually means you are earning roughly 150, no, it should not be 150. You are earning roughly 250 million, 250,000 monthly, right? So it means 800,000 of that 3 million will not be taxed. It's not taxable, right? Based on this breakdown. However, the remaining 2.2 million is taxable. So what you now do is, okay, from 800,000 to 2.2, where does that fall? So it falls under the 800,000 to 3 million. So 15% of 2.2 million is what you will pay. I don't know if that makes sense. Let me use the higher tax rate. So you are earning 12 million monthly, let's say. That means you are earning 1 million monthly. You're earning 12 million annually, meaning you're earning 1 million monthly. The first 800,000 of that 12 million is not subject to tax. Meaning from that 12 million, 11.2 million is what is subject to tax. However, that 11.2 million is not subject to the same tax rates. So from this 11.2 million, the first 800,000 of that 12 million is not subject to tax. Meaning from that 12 million, 11.2 million is what is subject to tax. However, that 11.2 million is not subject to the same tax rates. So from this 11.2 million, the first 800,000 of that 12 million is not subject to tax. 2.2, right? The first 2 point, let me just say, from that 11.2 million up until 3 million, right, will be subject to 15%. So what you do from this 11.2 is the difference between 800 and 3 million is 2.2, is to deduct 2.2 from here and subject it to 15% tax. Like if you deduct 2.2 from here, you should have about you should have about 9 million naira left, right? So that 9 million falls between 3 million and 12 million. So it will be subject to 18% tax. So that is how the tax will be paid. Remember, I said it is a progressive tax system. So the higher you earn, the more tax you pay. That's the implication. Progressive, right? So if you earn more, you pay more. That is how it is presented. Thank you so much for your attention. My name is Christopher. You can connect with me on LinkedIn. I hope I've been able to, touch on topical issues and questions that we had. Right. Thank you so much. I'm open to taking questions now.
Yeah. Good evening.
Good evening.
Yeah. Thanks so much for this explanation. So thanks so much. So I have two questions. So my first question is that I think I want to confirm that is it true that we are to, like, if you are going to pay the tax, you are going to remit it to the state's revenue and not the national revenue? The second question is that let's assume I work as a remote worker and I also have a business by the side, that a small business that I run by the side that is also enough to, let's say I have a small business I run by the side. So do I pay both the personal income tax and also pay the tax on business?
All right. So to answer your question, the first one is whether you are new to the state or the national. The answer is national, right? So one of the things this current tax law has also tried to do, like I said, there are multiple taxes, right? There are multiple tax systems, which is there are times where the state has a particular tax, and at the federal level, they have a particular tax too that you're supposed to pay. So you pay to the state because you live in a particular state, right? And then you will pay to the government too because you live in because you live in Nigeria, federal government. So you now see things like people, living in a particular state to another state because the tax is lower there. So that is one of the reasons why they changed the name, right, of from FIRS, right, to NIRS, which is Nigerian Inland Revenue Service now. To ensure that now there are still some taxes that will be remitted to the states, depending on the state you are, right? No doubt. But the tax in question that we're discussing, right, is to be remitted to the federal, right, to the IRS, right? So from there, the distribution, the fact, the allocation of of revenue would now be done by at the federal level. However, they expected to remit to the national, that's not the state, right? Like I said, I think just go to that fiscalreforms.ng. You see the calculation, you see how to go about the remittance and all of that there, right? So it's at the federal. Right? To answer your second question, remote worker and business. Right? So depending on the nature of your business, right? Depending on the nature of your business. If your business is an LTD, a limited liability company that is recognized as a separate entity under the federal law, your business will pay and you will pay. I don't know if that makes sense. However, if it is, a one-man, one business show business, right? The income that the business is generating is assumed to go to you directly. I don't know if that makes sense. So you will take that income, add it to your own income, and pay tax on it. I don't know if that. So, I mean, your business might not be registered, quote unquote, legally. So, under the law, it might not be recognized. However, the income you're making from that business, whether it's a side also, whether it's a formal business and all, right? But once that business is legally recognized, as like you've registered it with CAC, or even went ahead to make it a limited liability company, right? The business will pay its own tax, except of course it falls under, the tax exemption. Like I know for some businesses in some particular sector, we have what is called a tax holiday, where for the first 2 years of the business, you might not pay tax. And the government has also made it interesting that for firms below, I think, 100 million, right, you're not expected to pay tax, right? Your tax is 0%. So I don't know if that answers your question.
Yes, it did. Thank you.
Okay, thank you for the section, Christopher. It was an insightful and enlightening one. So I'm sure we all gained valuable knowledge from the section, and especially on understanding tax responsibilities and how they affect freelancers. So I appreciate you for sharing your experience with us today. Now, I have a question actually. So, what about employees with irregular salaries? How does the pay system works for that kind of employee? Please, can you hear me?
Yes, I can.
Yes.
I would have to ask you to define what you mean by regular salary.
Please, I can't hear you.
Oh, sorry. I said I would have to ask you to define what you mean by irregular salary.
When you don't have like a stable salary. Hello.
Okay. Yeah, I can hear you. I'll try to
Yeah.
answer that to the best of my understanding. Yes. So, if you don't earn income, you cannot pay tax. That is the
Okay.
truth. So, if you are not earning money, that is, if you're not paid for your service, you can't be taxed. So, if by regular you mean the firm owes money, it means that, of course, if they've not paid you, they cannot tax you for what they've not paid you. Like, especially if they are taxing you for paying, it is from what they've paid you that they will deduct the pay, right? For instance, you're working in a firm, you're paid 200,000 monthly. So, for those of you who have experienced the corporate sector, you hear something like gross salary and net salary, right? So the difference between the gross is that this is how much they are paying you from the company purse, right? And the net is this is how much you will receive when the money is paid out. The implication is that the difference between the gross and net is that the gross is how much the company is removing from their own pocket, right? But before they send you the money, they will remove some deductibles, right? That is allowed by law as well. Don't forget, the company is not allowed to just remove money from your pocket, right? That is allowed by law. And some of those deductions are pension, health insurance, tax, that is the normal tax, and what's the last one? Yes, NHIS, housing insurance, right? So those are the four, to the best of my knowledge, the four allowed deductions from your salary as a worker. So when they've now made those deductions, that's when they now send you your, so whatever is left is what they send you as your net. So I mean, for a regular salary, the money is not coming. It obviously is not an income for you. So there's no tax to pay. But of course, if eventually they pay you the money, that money is subject to tax as well. I don't know if I answered the question.
Yes, thank you very much for that. Please, if you have a question, you can kindly raise up your hand and we find a solution. Please, does anyone have a question? Okay. In the absence of no question, thank you everyone for joining today's section, and a big thanks to our speaker for answering all the questions and then for the insightful section with us. Um, so I think that will be the end of the section for tonight, and then don't forget we have another section tomorrow where we are going to talk about the tax compliance. I will enjoin you all to join the section tomorrow as we learn about the tax compliance and how it has to do with freelancers and founders in the tech space. So thank you for today. Thank you for joining today's section. I hope you had a great time. Good night.
So blessing has a heart.
Okay. Good evening, everybody. I want to express we at GDG OAU, we express our immense gratitude. You guys, it took a lot on the part of Mr. Christopher Ajewole to show up today. And that is something that we do not take for granted, to be very honest. Thank you so much for creating such beautiful slides, for being so explanatory. Thank you. Thank you very, very much. And the recording, for those that would want it, it will be uploaded to our YouTube channel, and can always go back to watch it again and relearn, right? But I just wanted to express my gratitude, to be honest. And also tomorrow, I don't know if you follow us on social media. Please, if you do not, go and follow us on all our social media platforms. We are active on X, IG, and LinkedIn, right? Over there, we've shared that even on the mainstream WhatsApp community, two major startups are going to be featured tomorrow. That's NG Chat and Counter AI, right? These two startups will be featured, and then an experienced compliance from a cybersecurity perspective would come share feedbacks as to what their product is about and all of that. And so that's something that I really would love everyone to be present for, because it's something that will be very beneficial. Just as you have learned so much today, we're looking at it from a different lens, from a compliance perspective, right? So thank you all so much for showing up this evening. I really, really, really appreciate it. Thank you. All right, good night, everybody.
Yeah, thank you. Good night.